you're looking to increase your probability of big gains prior to the end of the year, check out today's 4 stock picks. My favorite is LABU. Let me know in the comments which is yours. Let's jump into it right now. Hey, remember that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So Anil's first pick is, I really like this one, Anil. SMCI, which I think stands for Super Micro Computer Inc. So what's the story on this?
Yeah, basically, I'm looking at strong accumulation distribution and up-down volume ratio and other fundamentals, but it's very strong. And my specialty is buying early while it's still in the base and not broken out.
Right.
And this one has a daily signal. This was beaten up a while ago, but now it's coming back and strong.
It's got a really nice consolidation pattern here. And I've noticed that on several of the stocks and also the indexes. If you'll take a look at it, take a look at the Russell. The Russell's doing this just long horizontal trend that if you can get where you can trade somewhere between the bottom and the top of it, that you can do very well with it. But this is looking really good. But I'm just noticing the similarity in that pattern that's happening right now in the marketplace. So SMCI, so you buying right here? Are you going to let it pull back a little bit?
Oh, it's probably buy it right here.
Okay.
We'll see. If it pulls back a little, it'll be helpful.
Okay. So you're not in the position right now?
No.
Okay. And just give you an idea. Yeah. So that works. And so, and for everybody, and Anil, you'll be carrying your stop loss of 5% on that as usual.
Correct. Yeah.
Okay. So, folks, I'm going to just throw you a curveball here and provide you what I call a special circumstance stock. And you might be going, well, what the heck is that, Dennis? What's a special circumstance stock? Well, Mara is, and I want to show you why. One, Mara tends to get in these little trading ranges like the one you see right here earlier that we saw earlier this year, this little trading range here. That's 18+% in that range. And that was basically moving that way on a weekly basis. Well, what are we starting to get over here? A similar type of range, and I'll draw that box around there again, where it can be stuck in that range. Over here, it was stuck in the range for 1, 2, 3, 4, 5, 6, 7, almost 8 weeks that it was stuck in that range. And so how do you trade the range, though? I wait until I get down to the bottom, or I will even put it in an order at the bottom of the range, fudging it up just a little bit off the bottom with my stop loss being immediately below the bottom. And that's where I would, basically target shoot an entry, and I would just try to ride it up into the past highs. Well, how big of a move is that? You need to know is that if I get back down to those lows and it runs back up to the highs, well, in this particular case, it's about 19%. So Mara is emulating the what it did earlier. And that's one of the things you will find is oftentimes a stock or even an ETF will tend to repeat itself from a personality standpoint. Have you noticed that, Anil, that sometimes some of these stocks and all kind of stuff that you follow, they wind up repeating a similar type pattern over and over again?
That's correct. That's correct.
And so when you recognize it, then you can plan your way around that. And so right now, I would be looking at laying in an order on this at my low here is what? my low here is 839. So I'd probably go 845 or so to get into the trade with then I would then try to sell it out of it at about $9.95. If I go below $8.24, as long as that's not more than 5%, that's where I would exit the trade to the downside. So that's number one. But as I said, when I say special circumstance stocks, the fundamentals on Mara are not that strong. They're fairly weak. 78 for the composite score, 0.9 on the up-down ratio. However, its accumulation distribution is an A. Yeah, on this particular one, Brad, what I would do is I wouldn't mess with, I would not do the 10%, 20%. It's just basically a straight buy, sell, buy, sell, buy, sell. And I would hide the order from the market maker. Nice, great question. So what do you think about Mara, Anil?
Mara, we do have a triple screen buy signal on for a while on the daily chart.
Okay.
The only thing I don't like it is below the 200-day line.
Roger that. Yep.
And so if I was going to buy it, I would not even buy it with the triple screen signal.
Okay.
But when it crosses 200, that will become interesting to me.
Okay, cool. I love that. So stock number 2 is DT. Again, this is another one of those. This one almost made it to the onto our top 5 list this week. Maybe it did make it onto our top 5 list, but I was expecting some kind of pull back into the 20-day moving average. But what's Dynatrace, a good tech company? Yeah.
The company itself, Dynatrace, is computer software enterprise.
Okay.
And again, the fundamentals are extremely good and passes my new very strong screen, which is based on MarketSmith as well as Minervani's trend template.
Okay.
So I like it, and it's still in the base, 8% to pivot. So I'll probably also get it today.
Okay, excellent. Yeah, let me double check. Yeah, I'm pretty sure that we had this on our list, on our top 5 list. I can't remember. I think I was looking for a pullback back to the breakout area though, and it came close to that. But so yeah, I like DT. So you're going to buy it somewhere around the close today, whatever the close turns out to be, $51. And then did you have a price on that you wanted to buy SMCI on?
No, I said it's about right now, but I'll wait till around 3:30.
Okay. So now, last but not least, this particular leverage ETF has been getting the heck beat out of it for a long time. However, it is starting to reverse. This is LABU. This is a 3-time leverage ETF for the biotechs. What's going on with this puppy is that on the 1st of December, it does a reverse split 1 for 20. But even if I buy it now, it just basically means I'll have fewer shares, but the shares will be worth more on when it starts trading again on the 4th of December. It has provided me an excellent move down into where we basically hit this bottom, popped up, came back, retested, put in a hammer, and then started to take off again. And so now we're moving back up above the 8-day moving average. And so where I'd be looking at potentially buying this right now is about the 8-day moving average, about, I would say 13.15 or so, with a stop loss just a nickel below that swing low right there. That swing low is at 302, and that will probably put me pretty darn close to a 5% stop loss. Now it's about 7%. So since that's about 7%, what I would do on this is I'd only buy a partial position on it, so that my exposure would never be more than it would be never more than the 5% I would lose on a full trade. Another way I could look at doing that is just putting the it shouldn't go below the 8-day moving average or 20-day moving average, and so that's another place where I could put in the stop loss. But I like the stop loss in the gap up, okay, in the gap. Another area, if you wanted to do it another way, is pick it up in the midsection of today's candlestick with a stop just, like I said, immediately below. But you're still looking at a 6 to 7% stop loss. So for me, it would be a partial position. And so, again, it appears as if this may be reversing. The other way I could look at trading LABU is just come over to the weekly chart and say, okay, where is the midsection of the candlestick on the weekly chart? It's about 302. So 302 to 305, I could also do my entry there. So, Neil, this leverage ETF, if it does take off and even climb back up to the 200-day moving average, well, it's kin to XBI. And you see XBI well below the 200-day moving average. However, forming a really nice pattern with a potential move back up to about 89. Go back to LABU. Sorry about that. Okay, LABU, where's it likely to go? Again, it's one of those where notice how this is falling faster. The other on the XBI, all this was level up here, these past highs. So I could also just pick out a Fibonacci level and throw a fib in there. That's one thing I have noticed, that on the leverage ETF, they still respect the fibs fairly well. So about there. If I get up to a 50% mark at 504, that would give me a potential profit of about 70%. Now, I'm not going to probably capture all of that, but about 70% to the upside. What's your, what is the, I'll bet your triple screen is saying, don't buy it yet and wait.
No, as a matter of fact, triple screen on the daily chart.
Yeah.
For the first time today, it has a buy signal.
Okay.
Which means something is going on. And actually what's interesting, and I haven't seen this in a long time, the daily sell signal was on way back in June.
Okay.
So since June, it's just dropping, and now looks like there's some life in it. But it's still, I think there is a resistance at the 50-day line.
Yeah.
And therefore caution, but signal is strong.
Yeah. And that's why, and that, I'm glad you brought that up, Anil, is right there. It's at the 50-day moving average. And that's why I don't buy it right where it's at. I want it to pull back a little bit to the 820. That way it winds the spring back up to hopefully have enough of a boost to break through those levels. Is the XBI through it? Yeah. And that's the other thing about looking at the non-leveraged ETF is, see, it's already broken out on the non-leverage, so that I can take that knowing both information having both information, and be able to jump on that trade to the upside. So, okay. one thing I just want to share with you really quick. Let's run over really quick. And as I said, this doesn't happen all the time, but it does, or every time, but it does happen a lot on the stocks and the ETFs that Anil and I highlight. If you recall, this is SOXL. SOXL, that day right there is 1027. That's when we based that. It was a Friday. We said if it pulls back down to this trend line right there, that we would be interested in potentially taking a trade here. We did with the Autopilot Premium members. We got in at about 1455, and from where it's at right there to about where it's at right now is up about 56%. Now, of course, we took profits at 10% and 20%, but hopefully everybody's quite happy with that particular trade. So, Anil, let's see what else we got here. Keys to success. Remember that. And this is Mark Minavini. Anil and I both follow Mark. Again, I want to thank everybody for the book. And a lot of people are asking, what about a hard copy? What about a hard copy? A hard copy is coming soon. But if you want to get started on the book, you can get it at autopilottraders.com /freedom. And that comes with some about $500 worth of bonus tutorials, like anything from candlesticks to basically how to do the OCO orders. And so it's really an excellent deal. And I want to thank Anil for doing the review and on the book. And so
the book is excellent. And,
thank you, sir.
I'm learning also a lot of new things. So thank you.
Okay. So, well, I tell you, folks, if you're as thrilled about the market as we are, I want to ask you to stay ahead of the game. Be sure to follow Autopilot Trading on YouTube channel. And also you can just get onto our mailing list for the updates that we send out on a weekly basis. So Anil, thank you very much. I just want to thank you for your valuable insight. Of the four entities that Anil and I covered, which one was most attractive to you? That is SMCI. Just put a note down in the chat box. SMCI, DT, MARA, MARA, and or LABU. Anil, thank you so much. Next week is Thanksgiving week, folks. So Thursday, Friday, I'm not going to do it. We'll not have a session on Friday. So enjoy, college football, enjoy, recovering from your turkey or whatever you're having for Thanksgiving, and just take some time on Thursday to give thanks. I mean, that's what it's all about. So aloha and God bless everybody. Thanks, Anil.
Okay, thank you.